There's two things that have to happen. You've got to see the number. You've got to know what the number is. You've got to compute the number. You've got to then do something with that number. And if you're understanding that, what happens in the brain is it's very easy to then look up at a board and see that the number isn't just a number, it's red or green. So the green means something, doesn't it? The green means something. And if we understand that the green means something, we know that we are bullish sentiment, we can make a very, very quick decision on the basis that that green is that decision, isn't it? That green is that decision. And that's when we start to recognize real quality in a quick reference. Just a quick reference, guys. That's all it is. But last night's trade, unbelievable. We did a classroom for about an hour this morning, literally an hour, talking about oil and the structures that were dominating the oil markets. Unbelievable. Probably impossible to find a better day structure. Now, we've seen a lot of these perfect day structures. But Phil made a great point, and I really appreciate that point. Phil said, even he could make a profit in today's market, which I appreciate the humor in that, but I also appreciate the seriousness in it. And what I said to Phil was very, very simple. Now you recognize what happens when you trade the really good stuff and you avoid the rubbish. Now you can see what happens because you're starting to recognize that really good stuff is important to your trading performance, isn't it? Everybody can trade everywhere if they wanted to. Everybody could find a buy trade right now on the S&P. Probably everybody could find a sell trade right now on the S&P. It doesn't mean it's any good. There's a trade available on every single market at any time you wish to do a trade, right? So finding a trade is not that difficult. Finding a good trade is obviously the kicker. This is the key to all successful trading, finding good stuff. But not necessarily even just finding good stuff, finding great stuff. And that's what we start to understand about putting pieces of a jigsaw puzzle together is what finding great stuff is really focused on, isn't it? Putting all the pieces of a jigsaw together, I start knowing what great looks like. Sentiment's in my favor, fundamental discounting is in my favor, structure is in my favor, volume is in my favor, dealer inventory is in my favor, lean trades are in my favor, one value line, two value lines, three value lines are in my favor, discounts, everything is in my favor. Now I can start taking advantage of real money trade opportunities, making the killings that you know are available if you just focus on those trades and avoid the rest of the stuff. Now, you might say, but that flies in the face of you saying, you know, this trade or that trade or the next trade. That's two different things entirely, guys. We try and get you to trade a lot to take away the fear of trading so that when the really good stuff sets up, you deal instead of thinking about it. There's been some amazing trades on gold. We called it live in the room. I want to make sure you're in that instead of being a fearty. If you're a big fearty, guys, you're not going to be in that trade. You're going to miss out on the biggest opportunities of the day. But if you've not got any fear of trading, then of course you're going to be involved in everything that breaks. Assuming you're at your desk, assuming that the trade is the right trade, you're going to be in every single correct trade that happens because there's no way you can avoid it, right? It's actually physically impossible, Phil, to not be in the best trades if you know what to do. You might be saying, that's not true. It is actually 100% true. There is physically no way you can ever miss a trade if you trade well. I'll show you an example of what I'm talking about. The prices are trading down and you say to yourself, right, I love this trade. I love this trade. I'm really, really excited about this. The value is going straight up and you go, right, really, really excited. And the price trade starts coming back down and you start saying, right, I love that. I'm killing myself to get in this trade. I really want to start pressing this button. And you say to yourself, right, the bottom edge is here. I'm going to give myself 5 ticks. I'm going to put a buy limit order here. So you've got your buy limit ready to play. And now you're watching. But obviously the value is getting better and better and better. the value now is better than it was the last time we made a low, right? So this was the last time a buyer came in here. The value that we had at that stage was that much. So obviously, if that's how much value there's in that trade, and if I just do that as a value study, at the present moment, I should be willing to buy at any price up to that point. Would you agree with that? I should be willing to buy at any point up to that point with the value line at that level, at that point in the screens. Because that's what happens, isn't it? Because if that's the value line, that value line effectively just moved into the chart itself, suggests that this is what fair value should be based on a value line, right? Do you agree with that, guys? Is that a very, very obvious thing to think about? Is that very obvious to everybody? So if that's where fair value is, because that's where we saw buyers willing to buy that value before, remember, that's where they actually physically bought value. That's what that point on the chart is right there. That is a buyer, right? Yes, no, 100%. Absolutely, that's where the buyer is. So they bought that value. So if they bought that value, and I see that this is where the value is now, and this is where the price is, this is my opportunity at the present moment, right here. That becomes my discount at the present moment, at that point on the screens. That's now what I've got as a discount, yes? It's not the fact that I've got a bottom edge. The one thing I don't have is liquidity. I maybe don't have any volume, but I definitely have a discount, yes? 100%, I have a discount. So obviously when I start to have a discount, I start to think to myself, that discount's good enough. That discount is more than good enough. So obviously what I start now doing is I start now putting in a buy stop order. So I'll look at that discount, and I don't want to put a buy stop order near fair value. So I see the price starting to drop down, and maybe my buy stop order goes in here, for example. Okay, so now I'm in a buy stop position. And if the value keeps moving and the price comes up, nothing happens, I'm not in a trade. The price drops down, nothing happens, I'm not in a trade. The price comes up, I'm not in a trade. The price comes down. Now my fair value price, my discount is obviously getting bigger and bigger and bigger, of course, as it goes forward. So my trigger might well now be somewhere here. So I'm following down my trigger with a buy stop, yeah? So I'm following down my trigger with a buy stop. So I can't not be in this trade. I cannot not be in this trade. There is 100% certainty that I'm going to be involved in this deal. Would you agree with that? It's physically impossible for me to not be in this trade. If it's that good, I can't avoid this. I can't find a way of getting out of not doing this deal. And that puts you into that idea that I better get this right. I better make sure that I get this trade right. So obviously what happens? Well, there's a couple of things that can happen. Either I can get filled on my buy limit order, or it might miss my buy limit order and suddenly go like that, in which case I've been filled, I'm now in the trade, and I am delighted to be involved with a very, very substantial discount. It is impossible for me to miss any trade that I want to be in. So in other words, if you miss a trade, it's telling me that there's two things that have happened. Either you didn't like it in the first place, which obviously opens the door to challenging that view as to why you didn't like the trade. Or secondly, you're just terrible at trading. You haven't learned anything from the classroom that we did about not missing trades, right? So it's either or. Now, most people will obviously have the defensive up, but straight away when they start thinking about that and saying, I didn't like the trade anyway, in which case we can then analyze the charts and call them out for being the idiots that they are, because they obviously must have liked the trade because the value was as good as it ever will be, so there's no point in you ever trading that market because you don't understand value. Or you're just a bad trader. You've just forgotten stuff. So there's two things that's got to be a trade. There's two things that's got to be visible. Either you didn't like the trade, in which case what has to happen? You have to look at your charts and say, right, that's why I didn't like the trade. That's the reason. And that's absolutely fine. There's many, many, many trades that I'll turn around and say exactly that point. I didn't like that trade. And this is the reason why I didn't like the trade. But at least I can then go back and prove why I wasn't in that trade, right? I can go back and say, well, okay, hindsight's a wonderful thing. The trade was a good one. I didn't get on board, but this is the reason why I didn't get on board. Because what does that breed? Consistency. Do you agree with that? That breeds consistency, because if I didn't like that trade and the same type of trade setup sets up again, I'm going to not like the trade again, right? I'm going to simply avoid the trade again, and that gives me consistency. Now, if I'm consistently wrong and every single trade I don't like wins, then of course I've got to take a look at my performance. But if I really like a trade, if I can't use that as my excuse, the error is on me, correct? It's on me. The error is my error. I've made a mistake, a real money mistake. And I have to own that mistake as a trader. And yes, of course, it happens to every single trader. But if you find that it happens a lot, that you're owning up to an awful lot of missed trades, you've got to then stop a second, stop trading until you figure out why you're missing the really good stuff. And then refocus your efforts on you as a trader. Refocus your efforts on that and say, right, what is going on with me? Why am I not involved in these $1,000 moves? What am I too passive? This was Phil's point earlier, that the trade was that good. But just imagine in Phil's case, if the trade was that good, imagine he then missed the trade. Phil would have to then put his hand up and say, well, that was on me, guys. That was terrible. But you don't just put your hand up and say it was terrible. You bloody well fix it. Why did you miss the trade? What the hell was wrong with you to miss the trade? What were you not seeing that you now need to be fixing in your trading to make sure you do not miss the trade in the future? What is it you need to fix? What is it you need to fix, guys? That's what we're trying to get to as a trader, isn't it? If we can understand that, if we can fix that as a process, we can obviously start making real big progress in terms of trading opportunities, can't we? Big progress. So think about it, guys. Have a real good think about what it is you're needing to see as a trader. Think about how these trades start setting up. Think about the things that you've missed. Think about the things that you haven't managed to get access to. I mean, oil has been one of those kind of markets today, but some of the trades we've shouted about this morning, the gold bottom edge, for example, is a classic example. The gold bottom edge is unbelievable. That's one you can't miss. If you miss that one, you have to put your hand up and say, I blew it. I absolutely blew that one. And guys, guess what? Everybody at one stage or another blows a trade. They just don't see it. They don't see it fast enough. They don't see it early enough. They simply have an idea that that is a mistake that I made. I do it all the time. I see a trade, I look for a price, and I miss out on a deal because perhaps I decide not to cross a spread. But there's more chance of that happening because maybe the liquidity is wrong for me, where it's not a problem for you guys because you don't have that excuse. I'm only going to take a trade if I can get a 50 lot on, for example. You know what I mean? That type of comment at lower prices. I'm not willing to start buying 50 lots on a cross because I'll slip through the prices. If you're a 2-lot trader, a 5-lot trader, a 1-lot trader, you're not going to have that problem. You're going to be able to get filled anywhere at any price. Ownership of a miss is one of the most important lessons anybody can ever have. Because it means that you're no longer scared of saying, you know what, guys, I blew it. I've just seen Paul's typed in that he blew it. I don't know if that's just in response to the classroom that we're doing here, but if you can actually honestly look at yourself and say, I blew that trade, I made a real cock up of that trade, the step forward you've just taken in your trading is huge. The ownership of a mistake, the ownership of a loss, It's like the guys in the bookshop, right? It's like the guys in the bookshop, the bookmakers. Yeah, I'm a winning trader. 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 I'm a winning better. Bollocks. There's hardly any winning betters in any bookmaker's shop, right? There's hardly any winning traders. There's hardly any winning bookshop betters. They're all punters and they've all lost money on the long term. Yes, of course, every single one of them occasionally wins, but that doesn't make them a winning. That doesn't make them a winning better. The person that I expect to be a winning better is the guy that turns around to me and says, "What? I lost that last bet." See the difference? Because I know they're not gamblers. I know they're not gamblers because they've actually admitted that they lost the last bet, because gamblers don't admit they lose, right? Gamblers don't admit they lose. They are simply, yeah, I won, I won, I won. Honest engine, I won. No, you didn't. You never won anything. So there's a huge step forward in psychology when you can start to actually start looking at those ideas, those aspects of your trading and say, you know what? I should have done so much better on that deal. So much better. And it might be your fill. It might be your price. It might be the fact you've missed a trade. The honest admission that you really didn't trade that one well by missing it or getting a bad price is the first step to redemption as a trader, isn't it? First step to redemption. Seeing great trades makes you a great analyst. Being a great analyst, unless you have a job in the bank as an analyst, isn't going to put food on the table, isn't going to give you the kind of lifestyle that you want from your trading, unless you are a professional analyst. What puts that lifestyle, that trading lifestyle that you've always wanted, onto your desk is being good at trading your analysis. If you're good at analysis and you're good at trading, now you've got a real money chance of making it, guys. You've got a real money chance of making it. And that's all you can ever try and get to, guys, is that phase of being able to say, you know what, I'm loving life here. This is fantastic. We're in great shape. Anyway, we're going to be getting started in a short while. Let's get through the numbers we've seen this morning. Let's get through this morning's numbers. It's Friday, of course. Not a lot from the European session to get too excited about. It's been a very quiet European session numbers, but the WPI numbers in Germany coming in a little bit firmer at 1.6%. The Swiss PPI numbers at 0.6%, also better than expected. And the Eurozone industrial production numbers prior was minus 1.7%, came in at minus 0.2%, which was also better than expected, but still negative. This afternoon, we do have quite an important US data release coming out, but it's not at the 1:30 slot. It's all the way out towards the 3 o'clock session. So we've got the JOLTS job openings numbers, looking to see if there's a pop on some employment opportunities. That's the JOLTS job openings. Forecast is at 10.02 million. So they're obviously hoping to see that slightly firmer than the prior of 10.4, but the forecast is for a slight downtick. And the second one is the University of Michigan consumer and inflation expectations. So we do have some numbers there. The forecast for the consumer sentiment is to be slightly firmer than prior, 72.5 against a 71.7. And again, University of Michigan sentiment is a good, strong indicator. It's been on a big downtick from the beginning of this year. It was trading as high as 85 at the beginning of this year. It's trading at 70 just now. So there was a big drop-off in economic sentiment. The forecast is for a higher print, and obviously at 70. The previous forecast was at 73, and obviously that 73 print was missed by quite a substantial amount. Well, it's on a kind of downtrend just now, so the chances are now that they're forecasting 72.5. The probability is, of course, that this is going to be expected to print perhaps as low as 70. That's what you would expect from those types of forecasts. We are below the forecast. Anything that beats forecast obviously changes the overall mood of the University of Michigan consumer sentiment as an indicator. So welcome in, guys. Welcome in. We've talked about bonds this morning. We've talked about oil this morning. We've talked about some great dealer levels on gold and oil. The euro had some great dealer levels. We talked about that. The S&P had some great dealer levels. We talked about that as well. We talked about the bonds from the curve perspective of twos, fives, twos, tens, and the 10s, 30s. Great trade, and the inflation break-evens, guys, was brilliant for bond traders this morning. Sensational for bond traders, and we're in pretty good position. We're in pretty good position to make, some great progress. So much so that the technicals on oil this morning were so good that they're going to feature in this weekend's. I mean, I can't pass up the opportunity for perfection. Oil this morning was, I mean, it's obviously a very used word. Oil this morning was perfection. We couldn't draw a whiteboard that was more accurate than what we got on oil this morning in terms of structure. It was that good. So it's going to feature in this weekend's, an article this weekend. I'll make sure I take a few screenshots before we finish off today, so that I can put them into the article this weekend on the oil structures. We're going to look at the inventory that the dealers were getting. We're going to look inside those value candles. We're going to look inside the structure on that, and we'll do that article this weekend in Smart Alpha folder. So welcome in, guys. Welcome in. Max has been relatively busy today. We've had spread trades galore. We've made money on all of them, and yeah, we're in pretty good shape on these spreads. So yeah, we'll see if we get any more. I'm going to be looking to maybe do another bit of business on the spreads, but we've just lost the bond, obviously, the sell at the top edge of bonds again. We sold the bonds earlier on today from a top edge. We gave you a half-back trade. What was a half-back trade level? 160, 130. What price did we break at the top side? 160, 130. Was that the sell trade? Yes, it was. So we gave you this half-back trade this morning. You guys know all about it. And you've just seen the level 2 liquidity on the bond breaking the half-back trade. If you remember, this is the level we told you about up here. There's the level. There was the idea we were talking about on this trade. If you look at it from an inflation break-evens point of view, what do you see? You see huge, massive opportunities, yes? So who didn't sell the top edge of bonds? Who was not trading this well? Who wasn't listening in on this morning's classroom to take advantage of that humongous opportunity to get short treasuries? Who isn't a very good bond trader? That is brilliant. And obviously a brilliant sell-off from 30s down to a low price there of 21s. If you're an ultra bond trader, you've actually taken out the low of the session. If you're a UB trader, it's taken out the low, guys. It's went from a sell at 197.04s to 196.16s. If you're an ultra bond trader. Unbelievable, guys. Unbelievable. Crazy how good this is. Crazy how good and how easy this is. Anyway, welcome in, guys. I'm going to grab a little bit of lunch. No data at 1:30, so you can chill, relax a little bit. And I'm not going to see any max spreads anytime soon. We've lost the bond, so there's not going to be any spreads coming up. We've done relatively well on a few contracts. The max account is up $720 at the moment. $720 at the moment on max, and 3 out of 3 winners. 3 out of 3 winners. So welcome in. I'll be back in 10 minutes, guys.